Well, let's join Jonathan Barrett from Commodity Broking Services in Sydney. Jonathan, welcome into the show as always. Really intriguing now, the correlation between equity markets and commodities. It's running extremely high, but one view overnight was certainly that while base metals and energy could rally while equities bounce, they are likely to fall by a greater margin should equities decline. What's your view?
Yeah, Carsten, look, we are drawing the parallel now between equity prices going up and all of a sudden more demand for commodities. That's certainly been in play for the last couple of weeks, and particularly on the oil price, because we've seen a lot of volatility, in the prices, down to 81, then all of a sudden back up to 89. And I think that whilst we see equity prices ebbing and flowing, there is certainly that pent-up demand for commodities. Whether or not it's justified is another thing, because remember at the moment, I think particularly oil, it's running on the back of a potential $300 billion spend, which I think is a bit of a concern.
Just clarify that one, the $300 billion spend relating to what?
Well, that's out of Obama, where I guess the whispers in the market are basically saying that he's going to come out tonight, basically and say he's going to put some fiscal package together. We feel it's fiscal because this is going to give him a real kick start, I think, onto the election process. So I think the market's looking for that, and I think that's why we saw equity prices relatively strong, and also saw oil prices which were relatively strong, regardless of the fact that we haven't seen the data yet, the weekly inventory data. So it's going to be quite interesting.
Where does this money suddenly materialise from? Not just the $300 billion you're saying markets are eyeing overnight, but then another $400 billion in the coming year. I thought S&P had said to the US government, thou shalt not spend.
Look, I guess the market wants it, so the market will either get disappointed, but at the moment, I think they can arrange it via the fiscal policy. But one of the side effects of a fiscal policy is it can be highly inflationary because it's a sudden jolt into the market, a sudden injection, but it can't be sustainable. So I think if we do get more of a fiscal policy, that could be inflationary, and it could also help gold prices.
Yeah, making sense of those moves overnight, because last week when there was that correction, it was a $100 an ounce move down. Yeah. We've seen half of that position taken out overnight. Just what kind of is the feeling amongst traders and investors right now as to holding that key commodity in this environment?
Oh, Carsten, it was quite amazing. We actually heard that it was trader error that started it. Someone pushed the wrong button and all of a sudden down she went. Then it gathered steam as we had positive results out of Germany and obviously news that of a stimulus package. People then moved away from gold as a safe haven and obviously into equities. I think it is interesting. 1920 was one of our big areas. Now, technically, a lot of people are going to start to look at that as a bit of a double top. So there might be more of a sell-on rally. But at the end of the day, I think if we do get a package, it's inflationary. So I still think dips can be bought.
Yeah, and just not to even ignore the fundamental economic news of the night, which was almost kind of just pushed to one side. That was the beige book. It does it not, just underscore how vulnerable the US dollar is in an environment like this with another weak print. It can only spell further US dollar weakness.
Look, Carsten, this is the interesting thing, and this is where the market is really divided between the US dollar strength and US dollar weakness. I'm in the camp that think that we'll get US dollar strength. Okay, I actually feel that flight to US dollars, the flight to treasuries, I actually feel that it just looks as if the US dollar will have a trend higher rather than lower. It is right on massive support, and if viewers want to have a look at the technical side of that, a lot of technical analysts will actually say that it looks like there's a major bottom. So yeah, I think in my mind I'm more of a dollar bull, but I like a dollar bull, and the reason I like a dollar bull is because that'll have an adverse effect on commodities. Commodity prices will go lower and be able to clear in economies a lot better and a lot cheaper. So that, in my mind, will get the economy going.
And yet, overnight, the dollar's moves are really influenced by Europe. So euro strength at the expense of greenback strength. This constitutional court decision, it was always going to come through, wasn't it? How do you understand that so-called relief rally when we kind of didn't expect anything other than that?
Look, I think the market sort of is just looking, you've got to look a little bit deeper into what's happening there. Because remember, the Christian Democrat Party has already lost 5 elections. So the German people are disappointed that their hard-earned cash is continually being spent bailing out the EU. So I think that what you'll find is a continuation, although it's been ratified and everything's okay, there will be a continued a pattern of disgruntled voters. And I think that in myself creates more of a concern, because then it adds to social unrest and also that potential of concerns in the whole EU group. So I think this is just the tip of the iceberg. Remember also that it might also have major effects on the Basel Accord. So when we look at it, I think that the relief rally around it, I think we'll have to see what pans out, because I think there's still an underlying theme that people don't want it.
Just a brief final thought on risk appetite. You could also argue US dollar weakness overnight, that was one key driver, was a return into equities, taking on board some more risk. But if you take the view coming out of SLJ Macro Partners in London, managing partner there saying, look, the festering problems in Europe are not sustainable, and that something's going to break in Europe very soon. That would just wipe out any risk appetite.
Well, I mean, this is the big thing. Europe still remains a concern. I mean, it just is. We're testing the boundaries of everything. So, you know, you can be up 200 points, you can be down 300 points. That volatility is telling us that the market is undecided. In my mind, this has still got a long way to go. And this rally we're seeing at the moment is based on stimulus in the US and solving problems in Europe. It's not going to happen overnight, so there's still concerns.
And you're calling the greenback to bounce, notwithstanding, at least in the short term.
You got
All right. Jonathan, thanks as always. Have a good day.
Thanks, Carson.